Hi, Siddharth. Good evening. Welcome to ET Now. Gosh, I just got to see how young you are. I don't know if this is the first massive sell-off that you're going through, but you are, you've clearly gone through the history of
This is
sell-offs.
my first one.
So tell our viewers of ET Now, when you go through those charts, yeah, it is your first one. Looking at you, I can make that out. You wouldn't have even been around for the 2008 one. But, you've gone through the charts, you've gone through the math, the data.
I wasn't.
What is it that shows? What do you have?
So I think there are a lot of clear, common, evident trends. I think every time the factors are different for the sell-off, but the conclusion on the markets is more or less similar. And I do think that markets have shown very similar kind of corrections, sometimes very fast, sometimes slightly slower, but definitely aggressive in terms of the quantum and the panic that they cause in the sentiment. And the common thing is that recoveries do usually take much longer than the correction itself. So if you just populate a couple of charts, you'll be able to see, I can make some thesis on how fast this correction has been compared to some of the previous ones. But as you know, in 2008 and 2000, the dot-com crash, we did see 50, 55, 60% odd correction and close to 300 to 500 days for recovery. And this time we're just on the 30th day. So let's see how this one goes.
Siddharth, hi, this is Ruchi Bhatia here, also from Delhi. You were mentioning how the recovery takes a lot longer than when we are in a downturn. This time around, what's your own assessment? How are things likely to shape up in the next few days? Everybody's been talking about that it's not going to be a V-shape or a U-shape recovery anymore. Perhaps we're in for an L-shaped recovery. Is that something that you're looking at yourself?
So there are a couple of points to consider. I think the important question everybody wants to know is, where is the bottom? So if we go purely on data, we've seen in the previous correction, Nifty has bottomed out between 14 to 18 trailing PE, and we're currently still at 20.5, if that gives you a perspective of how bottoming out works. In terms of the real economy, we do think there will be some pain on ground, because as this is not a supply side issue like the global financial crisis, this is more of a demand side issue. It's a sentiment issue, and we need to get people out to spend, eat, dine, go to theaters, buy things, travel. So there is going to be a worldwide slowdown in economic activity, and we do feel that some of the businesses that are highly levered or highly valued could see some pain. And we've seen the banks and NBFCs, which were valued at a huge premium, have started correcting significantly from their near-term highs. And I think this is going to be a U-shaped recovery. The recovery is going to take some time. But for new investors who still haven't entered the market, I think they should keep a keen eye on the markets and the valuations, as some companies are starting to get in a very attractive zone, and entering any time from in the next 1 month would put them at a better advantage than someone who's already invested prior to the crisis.
Okay. I take that point, and it's of course for the first time investors to see if they have the confidence, the conviction to enter the markets at this price point. You've talked about the U-shaped recovery. You've talked about how it'll take time after the endemic to see the recovery. You've done the thesis also to show how after SARS and similar outbreaks, how long it took for recovery. Can we talk a little bit about that? What is it the charts show on that front?
So in terms of, if we go purely by disease-led crisis, then what I can make out is that this one so far is the sharpest among the disease-led crisis. In the prior, we saw close to around 15 to 18 odd % correction, and we're already close to 21, 22 odd correction at this time. But the interesting thing, the silver lining here is that 1 year post these crises settle in, investors are making anywhere between 50 to 80% returns in the recovery period. The recovery is slow, but I think the risk reward is also favorable. Right now the world is in a complete risk off mode, and surprisingly even gold prices and commodity prices are tumbling down. So that's a bit of a mismatch, and the broad thesis says that when stocks go up and gold goes down, it's risk on. Stocks go down, gold goes up, it's risk off. But when both go down, we could be looking at a sort of a depression scenario. But it really depends on sentiment, how coronavirus spread is controlled. And I think India is still in phase 2 of the spread. The next 2-3 weeks will really shape up how the next year really goes for India, at least.